We started this business in 2019 as a way of leveraging energy with a view that Bitcoin would be a logical way to monetize stranded and distressed energy assets. Our focus is on Bitcoin mining and high performance computing, and it's a fully integrated model where we're looking to leverage a long-term strategy to transition the world into a decarbonized society. Mawson, at an overview, $778 million market cap at $11. We're rapidly expanding our hash rate from 0.2 of an exahash in Q1 2021 through to 3 exahash in Q2 2022. Different to a lot of other Bitcoin miners, we've got a really high proportion of the business owned by insiders. So as a founder of the business, we're highly concentrated and focused on ensuring great shareholder returns. The management team currently owns greater than 30% of the business. Importantly, we're a net zero carbon Bitcoin mining operation with a really high operating margin at 80%. Looking at our business overall, we've got a really broad and diverse management team with a highly experienced board. Our chairman is a guy named Greg Martin. He is the former CEO of the largest energy company here in Australia. And he's built a wealth of experience for us as we've been locating sites and doing PPAs with stranded distressed energy assets. We currently have 2 operational sites in the US, and we've been building additional sites around the world, and specifically one in Australia, which we'll be releasing to the market shortly. Our existing operations have about 400 petahash online, and as I earlier indicated, we'll be moving to 3,000 petahash online by the end of Q2 2022. All that equipment is locked in secure contracts and ready to be delivered and deployed in incremental stages over the next few months. We're highly disciplined in our capital raising strategy and allocation of capital. To date, we've only raised $72 million, and with a target of 5,000 petahash in 2023, we're looking to really ensure that our shareholders have phenomenal performance. ESG is a core part of our business, and it's not just about the environmental aspects. We're highly focused on the social interaction, the license to operate, and that good corporate governance. Critically, 80% of our energy mix is non-carbon emitting, and we have a lot of community engagement. One of the key advantages that Mawson has is our low cost rapid deployment via our modular data center and our low cost power infrastructure. Since our launch in 2019, we've only done $72 million of capital raising, but it's enabled us to get to 3,000 petahash online or 3 exahash. And we've strategically done that at times when we've seen the market opportunities, had the right opportunity to acquire equipment, and we've found an opportunity to leverage that equipment purchasing. More recently, in August this year, we completed a $37 million PIPE and purchased an additional 17,352 miners for 1.5 exahash of hardware. If you look at our business today, it's operating out of 2 sites in the US with 400 petahash. That's producing just over 3 Bitcoin a day and with just north of 100 megawatts of operating capacity. Looking forward to the end of 2022, we'll have both our mining business and a hosting business. We'll have 2 sites in the US and 1 site in Australia with over 3,000 petahash online. 3,000 petahash online equates to approximately 23 Bitcoin a day. And against that, we'll have about 400 megawatts worth of operational capacity. Rolling forward to 2023, we see 3 sites in the USA and 2 in Australia with approximately 5,000 petahash online, producing just around 39 Bitcoin a day and over a gigawatt worth of pipeline for energy capacity. Having a look at our infrastructure, which I think is one of the key differentiators between us and a lot of the other operators in the space, is that we've targeted sites that are in great jurisdictions. So we have very strong relationships with our peer group, and we're looking for sites that have got stranded or distressed energy in regional locations. And what that's led to is a business with a sub 4-cent cost of power across all our sites. Critically, that combines with our modular data center to allow us to rapidly deploy in each location. We have the opportunity to be able to build these facilities and building the energy infrastructure in these facilities while simultaneously building our modular data center to ensure that we can get them deployed and located on site quickly. Key to that is our site in Georgia. The lease expires in 2038, and we've secured a couple other additional sites that we're in the process of building out. All of this is surrounded by and encompassed in our framework of net zero 2030. And core to that is the idea that we'll ensure that our energy mix is always greater than 80% non-carbon emitting, and we'll use offsets and credits to ensure that we get to 100% net zero. This is one of our modular data centers being installed in our site in Georgia. They're a highly modified 40-foot shipping container that have capacity up to 2.5 megawatts. Each container holds 588 ASICs per machine, and it costs us approximately $150,000 a megawatt to deploy. And this is really a highly advantageous price to deploy per megawatt, and gives us a great competitive advantage as we deploy capital out into the market. Our Georgia facility is in Sandersville, and we have a lease there until 2038 from the Development Authority. Phase one's been built and it's 25 megawatts, and that's actually up and running and fully deployed. Our power cost there is 3.5 cents a kilowatt hour. Phase two is currently being built at the moment, and there's 75 megawatts with additional capacity to go on there, bringing the total site to 100 megawatts. Combined, the 100 megawatts will be 80% non-carbon emitting. Our target for 2023 on the site is 400 megawatts, and we'll be operating at north of 80% GP margin. One of the great things that Georgia allowed us to do is expand into hosting, and we're targeting to have 100 megawatts worth of hosting capacity at the site. With the current market dynamics around energy and in Bitcoin mining, we're seeing an average margin of 2 cents a kilowatt on our existing hosting customers. And if we can get the full 100 megawatts up and online, you're seeing annualized revenues of approximately $52 million and a GP in the business of about $17.5 million. We currently have 3 hosting customers online, and the margin is about 33%. So it's a great little operating business. So for those that aren't, au fait with Bitcoin mining, revenues derived by our hash rate over the global hash rate, times by the block reward, times by the Bitcoin price, less our operating costs. So with 400 petahash online, our annualized revenue approximately $47 million, and that's our current run rate in the business. Our GPs are greater than 80%, but we explained to the market we're greater than 80%, and it's our approximate number. The end of 2022 with 3,000 petahash online, annualized revenue of $350 million or 80% GP. Our target for 5,000 petahash online or 5 exahash would see an annualized revenue of approximately $580 million, again with a GP north of 80%. And this is all based on Bitcoin at $40,000 and the difficulty in mid-August. As I alluded to earlier, a highly experienced board and management team is key to our business. And we've always been focused on having a genuinely independent and well-governed business. Our chairman, Greg Martin, is the CEO of Australia's largest energy retailer. And then our non-executive directors bring a wealth of experience in both NASDAQ and Australian listed companies. Our CFO, Hetal, comes from PwC and has a wealth of experience in listed companies. Liam Wilson, our COO, is based in New York and oversees all the US operations. Nick Hughes-Jones is a commercial officer, and he oversees investor relations and new site development. And Andrew Judge, our company secretary, has a legal background, obviously, but specializing in emerging technology, infrastructure, and financial services law. Looking forward to our business, where do we see ourselves in the next 2 to 5 years? We'd see ourselves 100% carbon neutral. We hit carbon neutral in 2020, and we see approximately 600 megawatts worth of managed infrastructure online with a power cost around 3 cents. Looking further out to between years 5 and 10, we'd like to be in a zero carbon business. And we see that transition occurring as we move our energy mix to wind, solar, and hydro, ensuring that we no longer have to rely on offsets and credits to achieve our carbon neutral stance. We'd like to have a gigawatt of installed infrastructure and see the power costs at between 2 and 3 cents. ESG is core to our business and core to our focus. And in 2021, we planted 25,000 trees and sequestered 22,000 tons of carbon. But it's not just about how you plant the trees and where you plant them. It's all about how you engage with the community as well. And key to that is our view that, being a good social citizen, it gives us the right to operate in the space. And core to that is how we interact with our local community. And there's a great quote here from Judy McCorkle, the administrator of the City of Sandersville, where we have our core site, where you're seeing our impact in the community is reducing power costs for the overall community. So we've enabled the city to get lower costs overall for all its residents. Bitcoin's being adopted rapidly, and I think everyone on the call will know these names. There's no point beating around the bush. It's rapidly being adopted, and we like to facilitate that. And as a Bitcoin miner, we see our role is really to provide the infrastructure in the space that underpins the network running. One of the questions we often get asked is what happens if the Bitcoin price pulls back? And we ran some real world data based on 100 petahash online between April and July this year, and at Bitcoin price 61,500 on annualized revenues on 100 petahash, you'd see Bitcoin at 61,000. The price change would have removed about $5 million if you fast forward to the 11th of July on an annualized basis. But against it, you've seen the difficulty move as well. So what we're really seeing here is that trend, that the relationship between the Bitcoin price and the network difficulty responding to price overall. And so what you see is a similar annualized revenue of $11.8 million. It's never been a better time to be a Bitcoin miner, and Bitcoin mining profitability has been phenomenal. Based on our current equipment that we're looking to deploy at the moment, our operational break even is approximately $3,680 based on 100 terahash equipment with 3,400 watts worth of power. And that gives us a lot of operating leverage to the upside. So as we expand our business with 2 exahash online, we see $40,000 Bitcoin. We've got $19.7 million worth of operational GP per month. And at $60,000, you're seeing $30 million worth of GP a month. Where's it put us? Well, ultimately, it puts us on the podium in our view. The growth profile of Mawson means that between today and in the future, we'll end up being up there with the riots and the marathons in our deployment schedule. And our 2023 target should see us as number 3. What's it mean for us as a business today? Well, we're currently looking to uplift from OTC markets to NASDAQ capital markets. And if you were to look at the businesses, Mawson's business compared to our peer groups, Bitfarms, Hut 8 Hive, Greenwich, Riot, Marathon, there's a large valuation mismatch between our current market cap and everyone else in the market. So we also observed that there's a difference between miners with facilities primarily located in Canada and those with facilities located in North America. All our facilities are currently located in North America, and we'd like to see that value uplift as we migrate to NASDAQ. And that's us. Thanks for watching Mawson Infrastructure.